All right, good morning, gang. Welcome back to the live room. How's everyone doing? As always, my name is Akil Stokes. I'm your host, co-founder of Tier 1 Trading, head trading coach over here as well. Push as Akil, not moving over into the new platform. We'll see. I told Jason and the gang to give me, keep me updated on. Sorry about that. I told Jason and the gang to keep me updated on how it goes, as far as the quality, as far as the delay, and if it works fine, then I got no problem going over there. So asked Jason this morning. He's probably busy right now. She didn't get back to me, but yeah, you guys can feel free to leave feedback as well. I heard there's only about a 4-second delay in the test that we experienced the other day. And how was it? Was it good this morning, Push? And Sam, hopefully your lady gets better quickly. We're gonna jump into some of these ideas in a little bit, but I like the small talk to start things up. It was all right. Any differences? The main thing that we always look for as far as feedback is obviously you want to see the clarity of the stream. That's important. The delay is big, right? Delay is not a big deal when you're doing live presentations and whatnot. Well, we are because we do a lot of feedback. But if you're just presenting with the live room environment, it's very important that the delay is minimal because you guys are involved in the analysis, right? You guys are asking questions. You guys are sharing ideas. If we're doing trader assessments, it gets quite a bit annoying if I say something, then it's like 10 seconds later, your thing comes in. But hey, we're always trying to do new things to upgrade the platform. There's a lot of stuff that we're working on the back end. We already updated some of the stuff. So hopefully that's one of the features that may come out. I didn't tell you guys this, but I did. We implemented a new quiz system. So what I did, one of my projects over the winter, I went through all the courses that I did, and Jason should be doing the same. And I always give you guys action items or homework during the course. So like at the end of the course, you'd be like, hey, find 5 opportunities. I actually created a quiz, a 5-question quiz for each section in each module. So in order to progress to the next section, you've got to get 80% on the quiz, which I thought was pretty cool. So hopefully that gets implemented soon. I'm not sure if we're going to wait till Greystone gets his done, if we're just going to kind of plug him in, but it's a cool little self-check just to make sure everything's going the right way. So let's get started. Real quick, I do want to talk about the fundamentals today because today is the start of kind of our news deal. We talked yesterday about the news week that it is and how it's a funky week for the first part of January. I even wrote an article about it on Medium, which is pretty cool. But we got 2 major news events coming out today. Hey, Kimani. We've got the ADP non-farm employment change coming out at 8:15, so in about 45 minutes. This is the precursor to Friday's jobs number. And what that means is that Friday's job number, non-farms, we typically all know about that. This is the number that people look to get an idea of what that non-farms release is going to be. Hey, Gilbert. So this is going to be an important event for that. They've been less correlated over, recently. But, historically, people are still looking at it as a precursor to it. And then later today at 2:00, this is another big one. We have FOMC meeting minutes. Now, these are going to be the minutes from December. But of course, with the changes of monetary policy, with the interest rate changes that are happening, around the world, but specifically here in the U.S. In May, I think we're supposed to start. The market is looking for any clues on, hey, if our economy is getting stronger, is that date going to get pushed forward? And if you're new to fundamental analysis, think about it like this, right? Interest rates are the centerpiece. They're the biggest gear in the middle of the whole deal. And all of the other minor news events are looked at as things that may help turn that big gear. Does that make sense, guys? If you visualize a big gear in the middle of your chart, I'll actually draw one on here. If you visualize a big gear in the middle of your chart, that is monetary policy. That is interest rate decision. Hold on, let me get my thing. And hopefully for you guys watching on Facebook, the clarity is a little bit better. It was horrible yesterday, which I was not excited about at all, but hopefully it's a little bit better today. But imagine this being your big year, your interest rate. Then you get all the stuff where you get your job, you got your inflation. So let's put it like this. Think about this as your big red news event. Then you have your medium news events, which are important because they move the big red news event. And then you got your other news events, which move the smaller gears that move the bigger news event. And that's how kind of fundamental analysis works. You're always looking, you're not necessarily looking at the thing, you're looking at the thing that will affect the thing that will affect the thing. And that's another reason why it's very difficult to be a fundamental trader, especially as a retail trader without a ginormous team. But let's hop into our analysis today. I got a lot on my radar, as I showed you guys earlier, so we're going to dig pretty deep. But I want to start with Keels, trade of the day. And we're going to start here on the loonie, the dollar Canada. So if you guys want to follow along, feel free. We'll kind of go through the same blast process that we talked about yesterday, right? Even though this one's a little bit different. But let's talk about big trend. Big trend here on the loonie. What are you guys noticing? Big trend, big trend, big trend. And again, big trend is going to be determined on what time frame you're looking at, how far you zoom out. But let's just focus on kind of the most recent move here on dollar Canada from 2020. What is the bigger trend? Dun dun dun. Bearish trend, right? Bearish trend. Now we're going to be heading into some consolidation. So I'm not mad at the idea of bearish of consolidation. When I write it in my notes, I actually have different levels. I have obviously bull trend, I have bear trend, I have bear consolidation, I have bullish consolidation. Because again, my opinion on trend. I think the question of what is the trend is a stupid question, because it will change depending on how close or how far you zoom out on the chart, or how specific you are looking at the areas. Yes, we need to define it. Yes, we teach you ways on how to define it with the new structure low, outside return, new structure low principles, stuff like that. But in general, it's a really fuzzy question, which is why I hate it. But as an educator, we've got to teach it. So I would call it a bearish consolidation. The majorest of moves has been bearish. But recently we've been in a retracement. We're kind of stuck at the previous, kind of in the middle of a previous outside return here. So bearish consolidation, right? If we zoom in a little bit and we look at the more recent trend, so the little trend, if B is big trend, L is little trend, right? I would say the same type of thing, right? We're in consolidation. The most recent move was bullish, but did we violate the previous level of structure resistance? That's the main thing that's going to be on my radar. Did we violate that level? Because my opinions on the market, my predictions are all based off of higher high, higher closes, or lower low, lower closes. We did not. So price has come to structure. Price has held at structure. Price has been rejected at structure. So that level of resistance is going to go hand in hand with our area of importance. If we're going through the BLAST, big trend, little trend, area of importance is that previous level of structure. What's going to be another major level of importance in your opinion? Hey, Kia. Nayan, welcome. Structure, right? So you can look at this level down here as being the next major area of importance, right? You got your previous structure highs right here. You got your previous structure lows right here. Again, this is the swing high to swing low right there. And then, of course, we have minor levels in here. Now, if we pay attention to the setup, right, we know that price action is coming into a previous level of resistance. We're coming off of a bullish move. Would you guys agree? A short-term bullish move. Talked about that with the little trend. We have rallied up. We've tested structure. We've retraced off of structure, this level right here looking left. We've rallied up again to retest structure, right? We pushed a little higher, but we did not violate our previous level of structure. And structure has held again. We then got a deep retracement. Now, what do we know about retracements and identifying the strength of a trend? Are deep retracements a positive sign for trend continuation or a negative sign? These are the little clues that market gives, right? A deep retracement is not a positive sign for a continuation, right? So again, what we're looking at, hey, price action has tested a previous level of structure twice now. It's refused to break it. Overall, we're in bearish consolidation. So we have that slight bearish bias or that slight consolidative bias. Now, for you guys that are more skilled in identifying specific patterns, anything pop out to you here? Anything pop out? Sam says possible head and shoulders. You are dead on, Sam, right? If we look at our trending move right here, swing low to swing high, this first test of structure ends up being our left shoulder. We get our retracement right here. We get our extension. Our extension refuses to break structure. That's going to be our head. We get the deep retracement all the way back down to the neckline, right? That's going to establish our neckline. Again, either slanted or horizontal, depending on your personal preference in trend lines and whatnot. And what we would need for a head and shoulders pattern is a right shoulder. So another test up, a failed extension, essentially. So the price action, I always talk about like it's a human being, the price, right? Price action spikes up, tries to make an extension, but refuses to get as high as the previous extension, which is another negative sign for continuation, which is a positive sign for potential consolidation and or reversal. So we can look for a potential head and shoulders pattern here. Thinking forward, right? This goes back to the areas of importance, right? Big trend, little trend, areas of importance from the setup. Now, if this head and shoulders were to play out, right? Let's say we break this neckline. I'm going to use that as my neckline because I personally like the horizontal neckline. If we break this neckline, where do we think price is likely to go? Caleb says, have you looked at the dollar yen daily inverse ascending triangle? I have looked at the dollar yen daily, not an ascending triangle on there, but I'll keep that in mind for later when we do our dollar yen. We still got the pullback trade on our on our radar from yesterday, if you guys joined yesterday. Or she says 123. Anybody else? 123, 123, going once, going twice, 123.01, 123.02, 122.99. Yeah, previous structure, right? The same area of importance that we identified lower or earlier, right? Previous structure. Now, here's the fun part, right? Let's go down to our lower time frame. Let's dig into a little bit more details of this consolidation, right? We know that when we have consolidation, what else should we kind of look for? What should be on our radar? We know that something specific tends to form during periods of consolidation. Gilbert says conservatively 124, just about a major structure. Yeah, I like that too, Gilbert. Yep. That lower level of structure. Yep. Again, we can get into the specifics later about where in that structure you want to take it at, but the idea, the main thing is that you guys are able to identify the bigger areas. Like, hey, this is the area I want to look for. Then we can always break it down and get specific using different tools to pinpoint where in that area. Sam says 123 is well possible equal head and neck length. So 1-to-1 measured move. Good idea, Sam. I forgot I taught that. But yeah, advanced patterns, right? So if we zoom in closely, and again, we're taking the analysis that we did, just like the IPDE. We're taking the analysis that we did in the higher time frame, just the general idea. We're putting it to the side somewhere on a notepad, and we're going to focus on the specifics, right? So we've got a few things happening here, right? So we've got an impulse leg, a swing high to swing low. I'm going to make this white so it stands out a little bit. That's going to be my X to A. If I take my Fibonacci retracement tool, and if I don't delete it, I drag it from my swing high to my swing low down here, I'm going to get the length of my B retracement. My B retracement is going to come past a 618, which means I'm looking at a Gartley pattern. We do not hit the 786, so I don't have to worry about a bat pattern. I'm going to get a valid C retracement as well. I never measured this out, but take my word for it. It's there. I measured it out this morning. That's going to give me a valid C leg, and I know that with a Gartley pattern, at least the way I trade it, I'm looking for a 127 Fibonacci extension from the A leg to the B leg, which is going to put us right up here at 128.24. and it's going to be a deeper Gartley because of that, the length of that B retracement. And this is going to be my potential reversal zone for that Gartley pattern. So we got a Gartley pattern, obviously coming right at structure. X leg is always going to be structure. If you're paying attention to volume, the little horizontal volume thing on the right, again, this is not too important to me. I just rather manually identify structure, but you can see it's right at that peak level. I minimize the little line, but there's a white line in here that identifies the peak level, right in that level. This is a bearish pattern formation. So it is a Gartley pattern in its own right. Now, and you can take it as a Gartley in its own right, but if you're someone that is maybe advanced, someone that wants to get fancy, what else can this Gartley pattern be used as? This bearish Gartley. And Caleb over on YouTube says 618 pullback for the double top as an entry zone. A little 2618 action. Yeah. So remember our bigger theme, right? If we pop back out to the daily, right? If you're someone that's looking at this as a head and shoulders pattern, right? We know that there's 3 ways to enter the head and shoulders pattern. There's the most aggressive way, which is at the right shoulder. That's the most aggressive way because we don't know that the pattern is complete. We're just assuming. The second aggressive way is at the breakout of the neckline. The third one is going to be the pullback. If you're someone that was looking for an aggressive right shoulder entry, you can see this pattern formation comes at a symmetrical level of the left shoulder. Caleb over on YouTube mentioned as well, if we take a Fibonacci retracement from swing high to swing low, oops, sorry. Where are you at here? I got the floaty mouse today. We're going to have some more 618 confluence around that level as well. You can see a 618. If I click on there we go. A 618 right there as well. You could look at this Gartley pattern and in 3 ways. 1, just the Gartley. 2, just an entry, an aggressive entry reason for the head and shoulders, right shoulder. Or 3, both. You could take it as a Gartley, take a partial position off at a Gartley target, hold on to a part of your position for the bigger extension, whether it's a move down to the neckline, which would be your safest area, or if it's to the extension past the neckline. And we can dig into some details a little bit later about where we can play that extension to. But that is my trade of the day. Dollar Canada head and shoulders / Gartley pattern. I'm going to get this over to our pro trade log real quick. While I do that, you guys have any questions about this setup? TradingView and YouTube people, I'm going to kick you off in a little bit while we dig into some more of the details after I get this over to our platform. I did it again. But let me know. I'll give you guys a few seconds to type in before I kick you out my house. Not you, live room members. You guys can stay. But the rest of you, you must go. It's not liking me this morning. One more time. It worked all 3 times with the other ideas I had this morning on the chart. And now it doesn't want to do it for me. By the way, I was playing a dangerous game this morning, guys. I was running a little bit late in my analysis. And I was rushing. I was cooking the bacon. I was making the eggs, trying to rush to get breakfast done. And I wasn't sure if I had time enough for coffee. So I was thinking to myself, I said, you know what? Should I go for it? Should I start the room with no coffee? And I was feeling all confident. And then I got scared that I might malfunction. So I chugged the coffee. You never want to deviate from the plan. The trading plan says make sure you drink coffee before your live room starts. So had to do it. But I was thinking about being dangerous. USD, CAD. I'm going to write daily /4 hour. I'll get to your question a little bit later, Orsi. Head and shoulders top plus potential bearish Gartley. Go ahead and get the chart over here. We'll put it in. Since my links aren't working, they worked all this morning, and now they don't want to work. And I'll put this on the main chat as well for you guys. And I'll read through the comments to make sure there's no questions that I miss, and then we'll continue on with our day. Remember, ADP coming out in about 20 minutes or so, 25 minutes or so. All right, let me get this on the main chat. Boom, boom. Perfect. We're good to go. Let me just check advanced patterns. 6-minute pullback, higher time frame.